Hi, you're probably on YouTube trying to find a video to watch and somehow you ended up on my video. No thanks. Now in this video, I'm going to talk about digital banking, 3 main topics about digital banking in Singapore. Let's go. I'll talk about 3 main topics. Firstly, what does having a sustainable digital banking business model mean? Next, how will digital banks shake up the financial landscape of Singapore, comparing it to Hong Kong as well? And lastly, I'll touch on the topic of value-destructive competition. Number 1. A sustainable digital banking model. On 28 June 2019, the Monetary Authority of Singapore announced that it will be extending licenses to non-bank players and allow up to 5 digital banks in Singapore. So you might ask, what is a digital bank? Well, digital banks do not have any physical branches. It delivers its banking services through the internet in other forms of electronic platforms and channels. Therefore, if an organization wants to apply for a digital banking license, one of the requirements is to demonstrate a sustainable digital banking business model. So, you might ask, what does that mean? A true sustainable digital bank business model means that a bank can make the possible use of customer interaction, such as being able to provide convenient digital channels where customers are able to make basic financial transactions and also providing security-rich services through those digital channels. Next, having digitally optimized processes. Digital banks should be able to digitalize customer signatures and forms to completely remove the use of paper. Moving on, to digitally optimize your products. Basically, products should be designed so that they can be easily purchased and serviced on digital channels. Number 4. Digital banks also need to digitally optimize their insights. Customers must always value personalized services that are tailored to their own needs. So digital banks need to sense and rapidly respond to their customers' increasingly eclectic demands and unpredictable patterns of banking behavior. Hence, digital banks will need to make use of different banking experiences and solutions to deliver the right product to each customer. Last but not least, a digital bank must also be digitally optimized, basically transforming a bank's own culture and organization to being more agile and adapting to the ever-changing customer behaviors. Following on from those 5 points, firstly, a bank must formulate a business strategy with innovative value propositions like constantly seeking on how to enhance customer value and experience through new products and service creation. Secondly, build a robust banking architecture and functionality to be integrated within existing digital platforms. Thirdly, leveraging alliances and partnership opportunities to develop a fully digital ecosystem which opens up to more customer bases and better technology and innovations to serve bankable customers. Number 4. Ensure key regulatory obligations in relation to establishing a digital bank are adequately understood. And lastly, a risk management framework must be set up with strong governance. Digital banks will bring about all sorts of new risks. Therefore, a robust risk management framework must be put in place to identify and mitigate potential threats. However, what if a digital bank does not possess a sustainable digital banking business model? Without one, a lot of implications will occur. Firstly, there will eventually be a lack of objectives. A digital bank will then need to lack the focus needed to achieve corporate goals and develop plans that will move the bank forward, meaning that the bank does not have a clear vision for the future. Objectives are very important because they are used to develop long-term growth and productivity plans that are essential for sustained success in a digital bank. Number 2. Resources will not be properly allocated. Business plans and strategies are used to allocate corporate resources into projects and operations. When there is a lack of planning, it is difficult to create budgets for such special products and understand the personnel and funding resources. Therefore, it is necessary to launch new products and grow the company, and if funds are used without proper planning, a digital bank can find itself short of funds during the time where they need to use it for critical activity. Number 3. There will be an unclear organizational structure. This establishes the responsibility of success of each department and helps staff know who to report for clarification of job duties and their questions. Therefore, without a coherent business strategy, the company structure is not defined, and therefore there's no focused effort in employee and corporate development. Last but not least, the communication flow will not be coherent. The efficient processing and distribution of information is very essential for success and growth of any business. Without a strategy, there will be no formal structure and communication, and important information could probably get lost. Each employee will eventually focus on what he or she feels is more important. Hence, this explains why having a sustainable digital banking business model is very important. Number 2. The effects of the issuance of digital bank licenses in Singapore. So, how will the issuance of digital banking licenses influence the near and long-term futures of financial services in Singapore? Well, let me start with the downsides. The issuance of digital banking licenses will cause traditional banks to have a sense of urgency in order to build better digital engagement and also customer experience for both retail, corporate and SME customers to ensure that they are able to retain their customers. There will also be increased competition from digital banks, which will force incumbent banks to move faster into data-driven strategies that look to monetize data among participants and also new financial service ecosystems beyond the traditional boundaries of the bank itself. Now, let me talk about the positives. Digital banks will bring about more choices for consumers and elevate their banking experience by making it easier and more seamless. Also, looking forward to more end-to-end customer journey experiences from retailers, travel companies, and other service providers. Singapore's move to welcome digital banks will also create new job opportunities, and at the same time, the new players' hunt for talent will drive for a potential churn in the industry. Furthermore, this will raise the capabilities of Singapore's SMEs by helping them adopt digital services. Moreover, the new players are likely to use Singapore to test innovation, and once matured, the products will be replicated across the whole region. Other than Singapore, another Asian country, Hong Kong, has also started giving out virtual banking licenses. In March 2019, the Hong Kong Monetary Authority granted more than 8 virtual banking licenses to fintech giants. What would this do for Hong Kong's financial landscape? Well, overall, it will drive fintech and innovation, but also bring about brand new customer experiences and further promote financial inclusion in Hong Kong. The introduction of virtual banks will also produce a catfish effect. So, what is a catfish effect? It is the effect where stronger competition will be more motivated to compete against the weaker competition. Virtual banks will also enter into a fierce competition with traditional banks in terms of customer experience and product innovation. However, after the introduction of virtual banks, the market anticipates gradual expansion of retail banking services such as cross-selling among banks, securities and insurance, cross-border financial innovation and cross-border product sales in 3 markets of the Greater Bay Area, and a greater diversity of asset management and wealth management products. The emergence of virtual banks will also make asset management platforms and commodities in new forms more prominent. Well, how will the two countries compare and relate to each other? At the moment, Singapore has a mobile penetration rate of 144%, while Hong Kong has 281%, almost double of Singapore. Meaning more people in Hong Kong own or use a mobile phone. This means that Hong Kong citizens will utilize virtual banking more based off statistics. Singapore's lower mobile penetration could be also due to its aging population. Comparing the two countries based on their financial landscape, unlike Hong Kong Monetary Authority, MAS seems to be more keen and ensure that virtual banks prove themselves first. A full-fledged bank status will be provided after MAS is ensured about the management's ability to manage risk. However, the Hong Kong Monetary Authority is more concerned about the stability and safety of their customers' money. Ending it off, the difference between Singapore and Hong Kong is not just a matter of numbers, but also the amount of capital and the extent of controls and the overall economic objectives, and the primary concerns of banking regulations and the mandates in needing more players.
Number 3. Value destructive competition.
Coming to the final part of the video, MAS has stated that it will not allow any bank to engage in value destructive competition to gain any market share. You might be wondering, what is value destructive competition? Well, it is an established sector which has a lot of value replaced and loses value. Basically, MAS doesn't want a situation where local banks who hold significant market share get their current position compromised due to the introduction of digital banks into the existing banking ecosystem. Instead, they want these digital banks to add value. A daily example of value destructive competition would be the introduction of ride-hailing services such as Grab and Gojek, which destroyed the value of the taxi industry. However, what if value destructive competition were to occur, you might ask? Well, what will happen to the financial landscape? It will reduce the profitability of banks with lower market shares, which will cause them to take excessive risks in order to prevent and counterbalance the downward pressure on their profits. If that doesn't work, it will cause an increase in shadow banking activity outside the regulatory perimeter. Well, I hope that you'll gain more insight into the digital banking industry in Singapore and its effects on the financial landscape of Singapore as a whole. Whoever has stayed through this long through the whole video, I really appreciate it. Thank you and goodbye.